Hello and welcome.
Hello and welcome.
Hello and welcome, everyone. Let's try it again. Before we're going to get started today, can you please confirm if you can hear me and you can see my screen? Today, we are getting started with our fifth webinar of ARAS Marathon Series number 2. And we are going to be talking about building the trading system, one of the most crucial elements in your trading journey. Before we're going to get started, let's make a quick tech check. Now, as everything is working fine, can you please let me know a plus in the chat if you can hear me, if you can see my screen, if you can see myself, so we can dive deep into the topic of our fifth webinar of the series. All good, fantastic, amazing. That's amazing. I'm happy to hear that everything is working fine. For those of you who don't know me, I'm Anastasia and I'll be your host for the next hour within ARAS webinar. And my first biggest lesson when I was starting my trading career wasn't a winning trade like for most of us. Just like you and me, my first lesson in my trading career was a margin call email when I was 19. And this made me realize that I need to find the leverage when I'm trading compared to the other, to the other education that is out there. Now, I got my first margin call when funding my first account, and it wiped my account faster than I was able to say the word volume. So I spent the next 9 years up until this point descending every single tick in the market, footprint and imbalance to figure out why the price really moves, to not repeat the same mistakes as in the beginning of my trading journey. So today, my charts don't look like chaos, and I hope they are not going to do for you either after today's webinar, because they basically read like a conversation between the big money and everyone else, as, for example, retail traders. So if you were ever blowing your accounts, if you've ever had the situation when a trade hits your stop loss just for the purpose of going to your take profit right after smashing it, if you've ever felt like you are discouraged or lost in the market, this webinar may be for you, because today we are going to be talking about one of the most crucial things for every single trader: building a trading system, testing, optimizing it. So before we're going to dive in, let me ask you a quick question for us to get started, right? Do you, as a trader, have the written trading plan and trading system that you follow? And when I say a written trading plan, I actually mean the written one, the set of rules that you follow, not mentally when you know what you should be doing and you're not doing this, but the actual trading plan, the trading system that helps you maximize profits in the market when the market is in your favor, and helps you to minimize the risks when the market isn't doing what you thought it will be. So can you please let me know yes in the chat if you do have the trading system already? Can you please let me know in the chat if you don't yet? And that's completely okay, because today's webinar is especially for this. So if you are not yet having the complete full trading system that you feel confident with, absolutely no worries, because today's webinar is especially for you, right? And today we're going to be building one as well together. Okay. Yes, but I'm refining it. Yes. I change it all the time. This is also the part of the game when you need to optimize the trading system. Now, the question is, are you changing it based on the backtesting? And are you changing it based on the lessons? Because if you do, then this is perfect. This is essentially what we want to do as a trader, because market is never stable. Market is never the same, and it changes from time to time. And we need to be able to optimize it. We need to be able to adjust. And this is one of the biggest advantages for our trading system is us, and it's our ability to critical thinking, is our ability to evaluate market conditions and to filter out the setups that may be looking good, but conditions may make it worse. And this is also the biggest weakness, we as a trader, and our sometimes inability to stick with our trading plan. So here's what we're going to be doing today, right? Okay, yes, but still backtesting it. No, but I'm working on it. That's okay. That's good. As long as you're working on it, as long as you're backtesting it, as long as you have a base that you can refine, this is fantastic. Thank you so much, Hailu, for your feedback. I'm very happy that you were able to refine your trading system based on our first marathon. And if someone didn't watch the first marathon, the recordings are available on the ADAS YouTube channel. So you go to our YouTube channel, you go to the playlist, and you will be able to find the first marathon series in the recordings available for everyone to rewatch. Okay? So thank you so much. No, market is very volatile. Indeed, it is very volatile. And because of this, we need trading system more than ever before, right? We need a trading system specifically to save us and help us to navigate in the volatile markets. So I hope after today's webinar, you will be able to find the trading system, or at least the base that is going to be working for you. Okay, so thank you so much, everyone, for joining today's webinar. Here's what we're going to be doing today, step by step. First of all, right, the first half of our webinar, we will be covering the 5 components of the full trading plan. So essentially the context, the zones, the entry triggers, stops, target logic, and risk management, and why every single one of them matters. So why do we even need a trading plan as a trader, right? Second half, we're going to be doing the live demonstration. So I will be switching over to ADAS platform and show you how do I apply all these concepts in real time. So from analyze the high time frames over the weekend, to drawing out the zones based on our volume profile, to executing trades with proper stops and targets, and putting all the knowledge that we gained on our first marathon series and the second marathon series level 2 together. So if even after the first marathon and the second marathon, you still feel a little bit lost, or you feel like you're lacking the understanding on how to put all the amazing things that we've learned, all these powerful tools that we've learned in one trading system, and how to test it out, how to apply it together, this webinar is for you. So does it sound good? Does it sound good for everyone? Let me know. Because if you are ready to learn step by step how to build your trading system, can you please type ready in the chat, and we're going to be getting started. Can you please type ready in the chat, and we will be getting started. Yes, I will show you how to calculate that. This is the basics of futures trading though. Sounds good. Yes, ready. Fantastic. Amazing. Thank you so much. Thank you so much for the engaging responses in the chat. I love it. So let's dive in. First things first, why do you even need a trading plan in the first place, right? Let's begin with a very bold statement as an answer to this very important question. So the only way to be successful as a trader, and I truly believe that, right, is having a plan. It's planning, and there is absolutely no other way. Okay, so it is actually having a plan. That's not just my opinion, though. Of course, it is also my opinion, but not only, because it's a mantra that you will hear from every single trading expert, from every single successful trader. So trading without a plan is basically like driving somewhere in a new city, in a new country, without having any GPS. You might eventually get somewhere, of course, and it might be quite an engaging and fun journey, right? Nonetheless, of course, it can be, but you will probably burn a lot of fuel, a lot of money along the way, and you are not going to get where you wanted because you eventually didn't even know where you want to get in the first place. So I'm sure many of you have experienced the difference when you trade with a clear plan and you have the clear parameters, the clear scenarios that you follow, and when you feel less in control because you trade based on emotions and based on reaction to what is happening on the chart. Last webinar, I was asking you a question and I got your responses. Do you trade based on scenarios, or do you trade as a reaction to what is happening in the market? Some of you trade based on scenarios, and I hope more of you started doing this after our previous webinar and scenario planning. Some of you trade based as a reaction to what is happening in the market. Now, I truly believe that you feel less emotional, more in control when you have a plan. when you have a scenario that you follow, when you are prepared to whatever can happen. And on the flip side, when you don't have anything of those and you are reacting to the market volatility, you feel perhaps more panic, like you can second guess any decision that you take. You are not 100% sure, perhaps, is the decision that you are making right now the best one? Should you hold the trade? Should you close the trade? What is that you should be doing next, right? This is the questions that constantly pop up in our head when we do not have a plan to focus on as a trader. So, like, one of the students long time ago once told me that he was feeling like a deer in headlights, okay, whenever a trade was going slightly against him. And perhaps you also felt it. So you open a trade and the trade goes against you and you feel lost. And you feel like, okay, what should I do? Should I exit it now? Or even worse, the trade was going actually good and then it started reversing and it started going against you. So there is also this, like, there is a feeling of being lost. There is a feeling of maybe I'm doing something wrong. There is a fear to perhaps close a profitable trade, hold on the losing trade because you don't have a system. Okay, so in the past, like with some of my students, we work together to build them solid trading system that allows them to trade with confidence. And this is what we're going to be doing as well with you today, because you want to know exactly when to enter and exit, how much risk to put in every single trade, but also not only this. Because a lot of people feel like trading plan is only about entering and exiting the trade and the risk management. But there is more to it. There is also how do you manage your trade. And there is, I believe truly, let's say like this, that a lot of problems of traders can be solved by answering yourself very important questions about managing your position. Let's say you open a trade and your trade is in the drawdown. What are you going to be doing? You open a trade and the trade consolidates around the entry and it goes in profit, in loss, in profit and loss, in profit and loss, in profit and loss. What are you going to be doing? Are you holding the trade? Are you closing the trade? Are you cutting the risks? What is your strategy for managing this kind of situation, right? Next, for example, if you open the trade and the trade went in profit and missed your target by a couple of ticks, what are you going to be doing? You're going to be moving your stop loss, trailing it? Are you going to be closing the trade manually? Are you going to perhaps be just holding it and hoping that it hits target? What is your answer to this question? If we are already talking about the trailing stop loss, for example, if you trade, like, do you trail stop loss? Do you? And if you do, then how? Mathematically, every 10, 20 ticks, 50 ticks? If you are a more intraday swing trader, or if you don't, then why? And perhaps if you do, then maybe you don't trail it mathematically, but you trail it based on the footprint zones or the volume zones. So all these questions need to be answered, attention, before you enter the trade. Because if you enter the trade and then you start asking yourself these questions, chances are 99% that you are going to react and act out of emotions, out of fear or greed or hope. Those are common emotions that appear when we are already in the trade. So if you don't have these questions answered, you are eventually going to be lost and act emotionally. Whether it's if you have answers to those simple questions before the position is open, it's going to be much easier for you to take the most profits from the position or minimize your losses, get out sooner without over-risking, and eventually not losing your account. So it all comes from planning and structuring your position. So why is trading plan so crucial? Again, a few key reasons. Just to summarize it, it's consistency, because markets are chaotic, like someone mentioned before, right? I was asking, do you have a trading plan? And Ali was asking, no, because the market is very volatile. Exactly, market is volatile, market is chaotic, but your approach shouldn't be chaotic and shouldn't be volatile. Your approach should be systematic, structured and well planned. So a plan that you have enforces the consistency in how you trade. So you are not just reacting impulsively to every single tick and every single change in the market, but you actually build the trading system step by step. And as one Aras article that we have on our blog says, and by the way, check out the blog because you're going to find lots of important and valuable information on Aras blog website. It says either you act in accordance to developing plan or you empty your account. And this is 100% true. I'm going to tell you immediately that I've never in the past 9 years saw any single trader who was successful without having a plan. Long story. Okay, in the long run. Of course, someone can make money eventually by accident, by luck, can be profitable short term, but not long term without a plan. Second reason to have a trading plan is because you have clarity under the pressure, and this is absolutely priceless. So when you have a predetermined strategy that you follow, you will not be freezing up or freak out in the heating moment, because the heating moment, guess what, will happen to you. It will happen to you. It happens to every single one of us because the market is the market. So professionals can stay calm and objective. Of course, we're all humans. We all have emotions. So forget about not having emotions. It's not about not having them. It's about understanding them. And it's about knowing how to act under the pressure. Okay? So if you can stay calm, objective, and focused during trading, it's only because you trust your trading plan. Whether it's the beginners and the losing traders, they trade without a plan, they often panic and make emotional decisions that lead to unnecessary losses. Okay? Next, you can measure your trading system and you can improve it. So a plan gives you essentially a benchmark. You can see it as a benchmark. And you can track how well your system is performing right now. And you can identify what is working and what is not working. So if you document your process, you will be able to see black on white how to avoid repeatable costly mistakes. The problem with us as human beings is that we unfortunately cannot implement changes that are necessary to be implemented if we don't have it written step by step, black and white. Because let me give you an example. Imagine that you are trading 3 different assets. And on one of the assets of those, you have 8 out of 10 losing trades. How your brain is going to see it is that even if you only have 2 winning trades on this specific asset, your brain will evaluate it as, hey, it's still possible to make money on this asset. So if we try harder, if we try one more time, if we keep trading it, we will eventually get profits. Whether it's the reality of it, maybe that you should just stop trading this specific asset. And if you stop trading this specific asset, you will, guess what, automatically increase your accuracy, win rate, and profitability. Because you just remove something that doesn't work. But for our mind as human beings, it's very difficult to act objectively when you don't not see it black and white in the text that this doesn't work. Because even if it works 1% of a time, the brain will think, hey, sometimes it works. So if I keep doing it, I'm going to get the reward, which of course is not the case, right? So quick poll in the chat. Can you please answer me in the chat? Who of you has learned the hard way that not having a plan leads to losses? And I'm going to be the first one. I've learned the hard way. I've learned the hard way. It was me 100%. It wasn't out of the good things and profits that I've learned that I need to have a plan and I should stick to it and follow it. It was lots of losses. It was painful. It was not nice. It was not pleasant. And it always hurts to realize that we are our own enemy in the chart. It always hurts to realize it, but realization to it is absolutely crucial because if you realize it, then you have the space and the way to work it and change it. Yeah, I know you are not alone. You guys are not alone. I see the chat. Yes, everyone starts it up. I completely agree with you. I think everyone starts it up and we all try to YOLO it and win it. Yes. By coming from the profession of planning. You see, sometimes even if we plan, the planning is a crucial part of our lives, we still don't usually apply it in trading for many different reasons, right? But it's okay. We learn the hard way. Now now you know that you need a trading system. So let's break down the comprehensive trading system and trading plan and what they actually include. Everyone, exactly. So exactly. But I'm asking this question, you know why? Because a lot of the times you feel like you are alone in trading. You can feel like you are the only one who's making these mistakes and everyone around you is successful. This picture on Instagram of success of traders trading from their beach on their laptop, this can be very misleading and it can be very difficult. Whereas if you realize that you are not alone, that you realize that there are many other traders who deal with the same thing, they face it, they are the same, we're all the same in certain ways, right? In certain ways different, certain ways the same. It's easier to deal with it altogether. Yeah. I'm still planning not trading. That's another side of it, Michael. Of course, you can get the paralysis by analysis, what we call it, right? And instead of being actually like objectively trading, you can be paralyzed by analysis. This also can happen. It's also not a good way. You need to start trading it eventually and back testing it to see if the system is profitable, to get confidence to start trading live. Now, let's move on to the components of our trading system, right? And let's go through 3 steps of consistency, clarity, and measure and improvement. So the full trading plan, which a lot of people talk about, is not just about I buy here and I sell here and I exit the trade here. So it's a complete framework covering your entire trading process, okay? In my experience, and likely in yours as well, a robust trading system breaks down to those 3 and more afterwards step by step, right? So the first one is essentially the consistency of the market context, right? So when we are talking about the consistency needs to be in the place when you build so you can read the market context like in the same way every single day without being biased by our own emotions. So the context and consistency in this sense means an environment in which you are trading. So before you even think about the first entry or taking a trade, placing an order right there, you want to handle the first market picture. And I call it consistency because it's the same way every single day for me. I'm going to be showing it for you later on the practicing part in Addus platform, but let's go through a little bit of theory. So first of all, what is the trend on the high time frames? So during the weekend, what I do every single week during the weekend, it's usually Sunday. I even used to host like a Sunday weekly forecast streams before a long time ago, because every single week on Sunday, consistently, I sit down and I analyze what is a high time frame trend, which part of the which state of the market are we currently in a range, in a flat, in a trend. So you can apply the AMD model here, accumulation, manipulation, and distribution. And then I check out where is the weekly and daily candle closure compared to the big volume areas, which gives me an idea of the future bias for the upcoming week. So I do this every single week. And after I checked it out, I mark out the zones which are going to be the most important for me, okay? Which are going to be the most important for me during the trading week. So my weekend is the base of my market consistency, because this allows me to build out the full picture. So when the market opens on Monday, I do not need to stress out and react to every single market movement. It allows me to plan ahead and to know where am I going to be trading, what are my zones of interest. And without this, when the market opens on Monday, I would be more inclined to react to immediate every single movement of the tick in the market. Okay, so in practical terms, again, we do the higher time frame analysis. So I take a look at the daily and weekly chart, which I'm going to be showing you. So for example, if you trade, I don't know, a-mini S&P 500, you check where the current price is relatively to the last week ranges, or any significant levels, volume profile levels, right? You check the state of the market, accumulation, manipulation, or distribution. Is it currently in? You mark out the most important high volume zones, so you know what are the zones of the highest interest for the market participants, and you can use the tools, for example, like TPO and market profile indicator and others to highlight for you the points of control of the week, of the month, and of the contract in relationship to the price. So you know where the price is currently at and what is your next big volume targets, right? Then you go to indicators for the context. Some traders, for example, you like to use the broad indicators like VWAP for the high time frames, especially if you are a swing trader also. This can be extremely useful for you. And if you don't know what VWAP is, we actually did a specific webinar on breaking down how to use VWAP in the combination with the volume profile. So it's available in the recording, so you can go back, you can rewatch it, and it's going to help you also to build your trading system, both for the swing trading approach, intraday approach, and scalpers as well. And then you go through the news and the schedule, a very important part, because even the best trading system may not work out if there is the specific news events that are going to be released during this specific week, right? That can affect your trading system. So you can look for example, interest rate decisions. You can look for non-farm payrolls, the Fed announcement, FOMC press conferences, Trump's tariffs at the very current moment, right? So you can decide if you want to trade ahead of important news or you want to avoid them. And this depends on your trading system. Some trading systems work perfectly in the environment of the news. Some of them actually don't. So you need to apply what works for you for your specific trading system. And then you check the related markets. Besides checking the asset itself that I trade, I also check the related markets. So for example, if I trade 6E or 6B, I check also the DX futures, the dollar futures, to check if my analysis on those specific assets is aligned with their US dollar index futures announcements. Okay, so you can think about consistency in a matter of the context as in a way of like a pilot thinks about the weather. Let's say like this. So you need to know essentially if you are flying into the storm or if you are flying into the clear view and the sky. And based on this, you will know how to behave, right? Because those are the completely two different behaviors. So let me ask you the question before we're going to move on. How many of you do actually check the high time frames? Because I also get this question a lot, like why, if I'm a like scalper, for example, why should I check the high time frames? Can you please let me know in the chat if you are the one who checks it or if you prefer to not? Put me plus if you do and minus if you don't. And I'm going to go ahead and be the first one because I do. I do check the high time frames always during the week. Yes, Timo says yes. Yes, perfect. Yes, I see. You don't need, okay? If you say so. Perfect. So, okay, yeah. Yeah. Depends on the market of trading. Okay. Okay. So, well, I actually do use it, but only during the weekend. So it helps me again to build my trading approach. We're going to go through this in a moment. So the next one is the clarity under pressure, and this is an intraday trading. So it is when the market already starts. Okay, so when the market opens from Sunday or Monday, depending on where you are in the world, what you want to do is you want to be able to have the clarity under the pressure. So what does this include? When I open my chart on Monday, and actually sometimes I even trade there overnight from Sunday to Monday, and this is the only night during the whole week when I actually trade. So when I open my charts, I know already my zones of importance. I know my zones of interest. And I open my chart so I can analyze, right, when the price comes closer to those zones. And I can then go to the 30-minute time frame, which I use to be able to determine the moment of entering the trade. So I call it the clarity under pressure, because when you are already in the market and the market is moving, it is already based, like it is already emotional, right? It is already emotional. Your emotions kick in, your bias and the perfect, like your own view kicks in the market. And sometimes we forget to think in terms of the scenarios, as we talked about last time. So you need to have the set of rules that, for me personally, it doesn't only allow me to enter the trade, but it also allows me to not enter the trade in a bad market conditions. So what I do, and I'm going to be showing it to you just in a few minutes on the Adas platform, what I do when I open my 30-minute time frame chart is that I wait until the price goes into one of the zones of interest marked out during the weekend on the daily or weekly time frame, and I wait for the market confirmation. So I wait for the volumes, VWAPs, volume profile confirmations, or for example, cluster search confirmation on Adas platform that allows me to decide that, hey, the market is not only in my zone, but also is ready to do what I'm expecting. Is it to reverse, if it's a reverse-based setup, or to continue within the trend if it's a trend-following setup. On the flip side, I have a set of rules that allows me to skip the trade if I see that the trade is not doing what I expect it to do, right? So it helps me to not only stick by taking a trade, but also by not taking a trade, and gives me the clarity in the market. The next step, what I do in this specific, also within the trading week, is that when I have the confirmation from VWAP, volume profile, or volume, or preferably all of those together, and I see that the price is theoretically ready to give a move that I'm expecting, I go to the 5-minute time frame. 5-minute time frame helps me to determine the timing of my entry. So I'm determining the timing of my entry based on the 5-minute footprint, the cumulative delta, cluster search, and either 5-minute or the range XV charts depending on the asset and the market situation. This also helps me to get clarity in the timing of entering trades, because every successful trade, I want you to write it down. It's like every successful trade has the component of their price and the time and the behavior, right? So the time, the price, the time, and behavior. A lot of people get stuck on the price. So they only analyze, this is the price at which I'm going to be entering the trade. They forget about the timing, and they forget about how to behave when they enter the trade. Okay? So this is something that I do during the week. We're going to be breaking it down. And after the week is closed, which is also the part of your business plan, a lot of people and trading plan, a lot of people think that when the week is closed, their work and job as a trader is done. But job isn't done yet. Because when the market closes, it is your time to measure, improve, and optimize. You go through the trades over the week, like that you took during the week, and you see what did you do well, what did you not do well, and what can be done better the next time. Now, a lot of people ask me, where to start, and I'm going to give you one tip where to start. If you want to optimize your trading system, the best way to start is to create the comparison table between your losing trades, all your losing trades, and all your winning trades. Meaning, you try to find the similarities in your losing trades and similarities in your winning trades. What does it give you? It gives you the information. Where do you lose money the most? Where do you make money the most? And it gives you the ability to create a rule for your trading system, which afterwards is going to minimize your losses and maximize your wins. So if you don't have winning trades, do not worry, go through the losing trades. A lot of people focus on increasing their accuracy and increasing their results by only increasing the amount of winning trades. But decreasing the amount of losing trades is also the way to improve your consistency and your overall profit, right? So this is also something that you want to be doing. You want to minimize your losses, you want to maximize your wins. Start with creating the comparison table between all the losing trades and all the winning trades. Find the similarities. It can be the technical aspect, some technical mistake you are doing. It can be the emotional trigger that causes you to take a losing trade, for example. Whatever it is, find the similarity and figure out how to create a rule that is going to help you next time to not repeat the same mistake. Because the problem of a lot of traders is that year after year, and I've been there, I know how it fails, year after year, month after month, making the same exact mistakes and not able to exit the loop, not able to exit the same circle of losing. So start there, and then the next step can be that you create the table of quality of your trading setups. You can find the best performing trading setup, which is going to be called the A+ setup. You can find the less performing setup, which is going to be the B+ setup, and then the least performing setup, which is going to be the C+ setup. It's going to help you to determine how much risk you take for every one of those setups. Okay? So it is going to help you to afterwards adjust your risks based on the setup that appears in the market. And this can really be priceless. So first, create the comparison table, losing trades, winning trades, make a rule out of it, which is going to help you to improve your overall trading system, minimize your losses, maximize your wins, and then qualify your trading setups and their consistency based on A+, B+, and C+, which is going to allow you to adjust your risk management essentially better based on the current market situation. Okay? So your trading system, whatever it is, needs to include those 8 elements. Okay? So every system that you have needs to be able to include those 8 elements. So please take a screenshot from that. And the first one is a framework to understand the market context. Okay? That's what we're talking about. This is something that I do during the weekend. High time frames, daily, weekly comparison with the current volume, where is the price compared to the current volume, and so on. The next one is identifying the trading zone or levels using the volume profile. So I created the narrative. I understood the bias for the next week. Now I highlight my zones and levels that are allowing me to understand where am I going to be trading. Like between those zones, I don't trade. I trade when the price comes to those zones, for example, or on the way to those zones. Next, you need to be able to calculate your stop loss and take profit zones as well as position size, right? There are several ways of doing it. You can calculate your stop loss mathematically, which is one way of doing it. You can also use your volume zones, for example, or VWAP zones as a way to place your stop loss and target. Or you can combine both approaches, and you can mathematically calculate the average size of the move that the price does against you from your entry and in your direction. And this is going to be mathematically your stop loss size and take profit size. On top of it, you can apply the volume. So for example, I'm going to give you an example. Based on statistics and mathematical calculations, the stop loss that I use for example, 6B and 6E, Euro future and pound future, is at least 20 ticks. Okay, so it's 20 ticks that I use as a stop loss. Now I can make it 20 or slightly bigger if my volume zone is in the way of the stop loss. So I combine the method, both mathematical approach and the volume approach, and this gives me the best stop loss placement for my specific trading system. Okay. Next, you need to decide on the entry pattern and logic behind every single market entry. So for me, for example, it's a combination of 30 minutes and 5 minutes. Entry timing, right? It's a combination for me of a footprint to check the market momentum and ensure that the market is ready to move in my direction. But besides this, besides the footprint, I also know the best times for me to enter the trade during the day. So I know that my best trades are entered in the first half of the day. So during the London session. What is the best time for you? What is the best time for you to enter the trade when the market is on average giving you the profitable positions? If you don't know this, chances are that you're going to be entering trades 24/7 randomly, and it's not going to allow you to stick by like your specific time period, and it's going to be massive for you. So you are going to be staying in front of your laptop so long that the quality of the decision that you make is going to be going worse after all. Okay, so what is the best timing? Backtest it, find it out, stick by the timing. Now the next one is risk management rules. So what is your risk per trade, daily risk and weekly risks? The risk per trade shouldn't be more than 1/3 of your daily risk. Daily risk shouldn't be more than 1/3 of your weekly risk. Take it as a base for your trading system. You can readjust it afterwards, but this is a good base to start thinking about. Think about your daily risk. It's maximum 1/3 risk per trade, maximum 1/3 of the daily risk, maximum 1/3 of the weekly risk. Trade management algorithm for both winning and losing trades. Answer yourself those questions after today's webinar. What do I do if the price goes in loss and starts consolidating? Not hitting the stop loss, not hitting break even. What do I do? What do I do if I enter the trade and the price consolidates at my entry, in and out of the profit? What do I do if the price goes in my profit and starts consolidating and not reaching my target? What do I do? What if I take the entry and the price goes in my profit? Do I trail the stop loss? And yes, if I do, then how? Mathematically, based on volume, based on footprint, based on VWAP, what do I use? If I enter the trade and the price goes in my take profit, but misses my take profit by a couple of ticks, what do I do? Do I close the trade manually? Do I hold the trade? Do I trail my stop loss? If yes, then how? Again, right? Answer at least those 5 questions. There are more, but at least those 5 is already going to greatly improve your trading behavior, reduce the amount of stress, the amount of pressure, and help you with your overall trading consistency. And next, in the end of the week, record and analyze the outcome, which is going to help you to optimize your trading system. Now, if this makes sense for you, if it resonates with you, if you're going to take it with you after today's webinar and try it out and at least now, okay, Okay, perfect. We are back. So at least you are going to try it out. Can you please put a plus in the chat, even if it's 1 point out of this whole components of the trading system that you are going to implement today? Can you please put a plus in the chat if this was useful for you, if it gave you some food for thoughts? Please let me know. Even if it's 1 point after today's webinar. Thank you. Perfect. I love it. Okay, now what I want to show you, because the next webinar, what we are going to be doing, the next webinar, we are going to have the full Q&A session. So if you have any questions today, please make sure to put them in the chat while I'm going to be going through the practice and show you some things and how do I apply all the knowledge that we've got throughout the series. If you have any questions, put them in the chat. Now, the next week, we are going to have the full hour only for your questions and answers. And those can be questions about anything, about the trading system, about the technical aspects, about the psychology, about anything you want to know, ARES platform, technical aspects, anything, literally, whatever you would prefer. Okay? So that's a good question. It is based on your specific trading system. It is not small or big. It depends on your back testing. Is the trade, like, is a 16 ticks big or small? It depends on where you enter the trade, and it needs to be back tested. And unfortunately, I cannot answer you this question. Check your past performance throughout 3 to 6 months and see if 16 ticks is enough for your trade to hold, protect your ID, but not kicking, like the price is not kicking your stop loss before going to take profit. Your stop loss needs to be placed in a point where your ID gets invalidated at the same time, right? It needs to be enough so the price doesn't hit it before goes into your take profit. It needs to be back tested. So spend some time on it. So once again, if you have any questions, please type them in the chat while I'm going to be transitioning to our ARES platform, showing you some ideas that I've got and the reason, like how do I analyze market over a weekend during the week. So we're going to have some practical fun. And by the way, their whole setup, the whole workspace with all 3 charts, daily, 30 minutes, and 5 minutes, you will be able to download in the description of this webinar after the webinar is over. So after the webinar is over, 30 minutes later, you can come to the same link, click on the same link, and in the description of the video, you will find the link to download this specific workspace. Okay, so it's supposed to help you to, it's supposed to help you to get started easier with building your own trading plan. Okay. Saeed, Ali, you need to please ask these questions to the support of ARES. Unfortunately, I can not help you with those questions. I'm going to be more than happy to help you with other questions, of course. Okay. So in front of you is the chart on daily chart on the 6B instrument, pound futures. And let me show you my thinking process behind that, right? I especially made the market profile a little bit darker. Now let me do it a little bit less dark so it doesn't cover so much. There we go. That's much better. So the first things first, what I start doing is that I analyze which specific state is the market at. Right here, we can clearly see that the market is in the uptrend. We can see that the market has been in the uptrend for a long time. And I can also notice the specific behavior from the market price. Apologies. So what I see here is that the market usually consolidates before diving deeper and then going higher. You need to give me a 30 seconds break and we're going to be right back. And apologies for the quick interruption. I was sick last week, so I needed to drink some water so we can continue the webinar in the best possible way today. So what we are looking at here, and what I see for this specific chart, is that the price consolidates before moving higher in the uptrend. It makes a dip, so it creates a pullback back to the downside and then moves higher. We can notice exactly the same behavior next. So the price consolidates, makes a manipulation before the next distribution and moving up, right? So accumulation, manipulation, and distribution. Once again, manipulation, accumulation, manipulation, and distribution. So we clearly see that the market is in an uptrend. So let me explain you my logic behind this specific week setup, because right now I have the 6B setup for short running already from today's morning, which is working out perfectly right now. And the reason behind it is the following. So as we can see, the price has coming down, right? And the end of the last week has closed right here. So this was the last weekly candle. I see that below I have at least one volume zone. So the one volume zone that is interesting for me is right here. And another one is right here, right? I know that before moving higher, the price is most likely going to create the manipulation. So I see that the price consolidates, and I'm already expecting by the previous price behavior for the 6B asset that it's going to create the manipulation before the distribution and the eventual continuation back to the upside. So what I was looking for is that I see that the price tested this level several times. It couldn't go higher. So I'm expecting the price to come back down. I am not going to be buying it from this level because we already had two tests, right? But I'm marking out those zones as the high volume zones where I'm going to be looking for some kind of price reaction. So this zone below the point of control of this movement, and this zone right here. I'm going to click on those zones and make them global. So they're reflected on all the time frames wherever I'm looking for this specific instrument. So this, for me, as a zone over the end of the week, I'm looking for the price to come further, come back, test it, and be using it as a resistance. So this is my sell zone for the week right here. At the same time, my target zones are going to be this one and the one at the bottom, because those zones at the end of the last week were not yet tested. So I'm assuming that the price might come here, right, and reverse from either, apologies, this zone or this zone right here. So my ID, my bias for the week for 6B was immediately bearish because I saw several tests of this zone. I knew the price failed to go higher. I knew I'm not going to be buying again from the same zone because the more times the price comes back to the same volume zone, the more times, the higher is the chance that it's going to break it. And at the same time, I know that if the price breaks it, I can use this zone as an entry for a short. My targets will be somewhere in the next big volume zones. So I'm building a bias and the narrative for myself over the upcoming trading week. I knew that this week we have a FOMC meeting minutes, and there is pretty much nothing more significant that is going to be happening overall, right, that could influence the price. So I knew that the background of the week is calm, and I can execute my scenario accordingly. So when the price came lower and started testing the zone, I started looking for the short entry. My targets will be this zone because the price could react from it, and the next one right here. As I can see, the price tested the zone already 2 times. So when I was entering today in the morning, I knew that my target will be the next volume zone because, again, the logic is exactly the same. The more times the price tests the same zone, the higher the chance of breaking it. So this zone for me was the zone that I decided to just watch out for, but however, not use as a target for the closure of my trade. So now as we have those zones, when the market opened, I move on to the 30-minute time frame. On the 30-minute time frame, I apply their market profile and TPO indicator with the settings of the volume profile specifically, not TPO. I have the weekly and the daily points of control placed. And also for those of you who use VWAP, you can use the VWAP accordingly also as your potential reason for the entry. Besides this, we have 3 indicators as a maximum levels. The maximum levels are the points of control only without using the market profile or TPO, because those keeps my chart clean. It still gives me an idea about the maximum volume distribution over the specific periods of time, but without overloading my chart. So those 3 reflect the point of control of the last month, the current month, and the contract. So this was the zone that I was looking for the price to break and retest initially. So when the price broke it, I was already looking for a short here. However, as we can see, the price started to consolidate, hit my break-even several times, and I decided to leave it. After the next sell-off yesterday, I started looking for the short entry. My first trade even was hit by the stop loss because I entered too early in the second half of the day, and the price still went higher to test the next volume. However, the next today's day, I started with watching for the next entry for short because my bias for this week was still valid. What I was doing is that the moment I opened the chart, the price was here, right? I knew that we have the volume accumulation here, this consolidation. So I was waiting until the price gets back closer to the volume accumulation. And for finding the specific point of control of this accumulation, I use the instrument in ARAS platform, which is called the market profile and TPO. So I use a market profile and TPO, determine the point of control on 35.63, and I was waiting for the price to retest the 35.63 level. When the price came closer to 35.63, if we put the VWAP on, it wasn't only, oops, for some reason it closed my chart. Let me present it again. In the meantime, if you have any questions, please feel free to ask in the chat. There we go, fantastic. So what we can see here is that we have the accumulation, right? The price came closer not only to the point of control of this consolidation, but also testing the lower deviation of the VWAP. For some reason, it keeps closing my ADAS chart. Having some issues with StreamYard platform recently. Okay, perfect. So when the price was here, I opened the 5-minute setup. And the 5-minute confirmation was right here. What can we see? That the price was not only testing VWAP and the point of control of the range, but we also had the stacked imbalance. The stacked imbalance is something that we talked about with you on the first series of the webinars, and we were even covering the setups used for trading the stacked imbalances. So as we can see here, the price came to the stacked imbalance and started to consolidate. At the same time, we had the imbalances on the bid side appearing massively in the all candles, and the next candle, where the imbalances on the bid side accumulated one by one, became my entry for the trigger, entry trigger. We also had several high clusters, so with a highly negative delta inside. So my entry was based on the daily and volume distribution and the volume zones on the daily time frame, then 30-minute confirmation and the VWAP and the volume profile or the point of control of the consolidation, and then stacked imbalance, the highly negative delta cluster, and the red footprint with imbalances on the bid side became the entry trigger for timing and for the moment of entering, opening the position. So that was the logic behind this specific setup. So right now it's running basically, and I'm expecting the price to reach 34.77, 34.80 level somewhere still today. So this is a setup from today. And this is basically the logic that I follow day by day, week by week for my specific trading system. So this is just an example of the trading system you can readjust it, you can change it based on your own approach. The charts, right, are going to be available for you to download. I also check the cumulative delta from time to time on the 5-minute time frame. Now, in this case, it wasn't useful for me personally, but it was useful on the weekly time frame, on the daily, because as we can see, the cumulative delta over the past weeks, starting from the 10th of April, was continuously declining while the price was still climbing up. And that was another confirmation for the potential short entry. And yes, you can use the same strategy for the crypto, because the principles of the market auction, price formation, is the same exact across the crypto markets, futures markets. Of course, you will need to test out the volatility, the average stop loss and take profit zones for your specific strategy on the crypto that you trade. But yes, the logic behind this system is 100% applicable to anything that you trade. The price action on the high time frame, yes, as I mentioned before. So basically, for example, here I see the two tests of the volume zone already before happening. So in my personal system, if the volume zone gets tested more than 1-2 times, I'm expecting the breakthrough through the zone. So I'm not going to be using it anymore in this trading in the same direction. I will be using it for the trading when the price breaks it, comes back to it, and trading in the opposite direction. So as this volume zone was tested as a support, I was expecting a breakthrough and entering from the same zone based on the resistance rejection. Ali, I don't really understand the question, to be honest with you. If you have any questions, please put them in the chat. I also do use the cluster search indicator in Adas platform for the 30-minute time frame and for the 5-minute time frame usually. So those are another indicator that I use. So I use a cluster search. Ali, if you'd like, as I said before, I don't use the order blocks. I trade based on my own trading system that is based on volumes and order flow. If you trade based on the order blocks, it's completely up to you. It's completely your choice and right, but I do not use order blocks in my trading. So I don't base my decisions neither on the order blocks. I still don't understand the question from each order flow. Ali, I'm sorry. Yeah, the strategy for you can be complicated, so you can simplify it to the point that you prefer. Your strategy can be much, much easier, David, if you would prefer it, right? This was an example on how to build the trading system, combining the high timeframes analysis for the context, for the bias over the week. So I, over the weekend, already knew that my bias is going to be short, right? With the entry, timing, position managing within the running trade already. The fear of entering the trade is, yes, I'm still bearish right now. As I said, I'm expecting it to go all the way here, 34.77, 34.75. So the fear of entering the trade can be easily solved with a back testing. I believe so, at least, because essentially, right? Essentially, if you backtest your trading system and you know that your trading system is profitable, it's going to give you confidence to execute the trades. Of course, if you do not have any data, it's going to be more complicated for you to enter the trade with confidence. At the same time, backtesting can help you to stay away from the trade if you know that certain circumstances, for example, are not in your favor. And also it can help you emotionally to survive the periods of the drawdown. Why? Because you will also know that that sometimes your trading system has their series of losses, the losing streaks. And you know that in the end of the month, you will still, for example, 3 months, you will still be profitable in the end of the day. So it gives you the peace of mind when you have their data black on white. Your system is profitable. If you follow the rules, you will be profitable in the end. And it's going to give you an ability and more confidence to enter the trade without being attached to the outcome, because the fear comes from not knowing what is going to happen. And you can minimize this fear, but actually getting the stats of your system of how you trade from 3 to 6 or 12 months. The best is 12, but at least 3 months period of time. Yes, exactly. Exactly. I fully agree with you. So you don't know the stats, you are going to have fear. I use a footprint as well on the 5-minute time frame. Doesn't have to be the footprint, but it can be the footprint, right? You can go to clusters and you can watch exactly the same thing during the clusters. So yes, I do use the footprint specifically on 5-minute and range XV charts as well. For currencies, I use range XV4. For gold, Nasdaq, E-mini, S&P 500, I use range XV6. Manipulation, we talked about the specific webinar. So there was a specific webinar for this topic, how to recognize manipulation, accumulation, manipulation, and distribution. It can happen across multiple timeframes because it's fractal. So it doesn't need to be connected to the specific time frame. How to recognize it is essentially the price action, but I also can recognize it based on the volume, not the volume profile only, but also the combination with the vertical volume. More details can be found in the recordings of the previous webinar. And also, if you don't find them, don't worry. Please bring this question next time. Next week, we're going to have the Q&A for the whole hour. So we're going to be talking about how to apply all these methods in the Addis platform. We're going to be talking about psychology. We're going to be talking about the technical aspects. Anything you need, we will be covering next week on the Q&A if it's not related to the topic of today's webinar. So I'm going to be right there for you. Yeah, no worries. But if you still have questions about this, please bring it next week, and we're gonna cover all of this. Okay. It doesn't seem like we have any more questions. If you have, please let me know. Doesn't seem like we do. Okay, perfect. I'm going to just open this for 1 more second so you can take a screenshot of this, because those are the most important 8 elements of every single trading system. If you lack at least one of those elements, you are going to have difficulties and struggles within your system. So please make sure you take a screenshot of that. Please make sure that you follow those, and it's going to bring you much closer to your trading goals, and the system, they make it your system more profitable, more consistent. So thank you so much for being here today. I do not trade algo. No, I am not an expert in that. What I do is I trade order flow and volumes on the Addis platform. That's why I'm here, right? I'm an expert in this. I'm not an expert in algo trading, but you can reach out to Addis support, and they're gonna direct you towards the correct resources. So thank you so much. Thank you so much, Hilo. Thank you so much, Saeed. I appreciate every single one of you being here today. Then next week, we are going to have the full Q&A webinar. So please make sure to attend. We are going to talk about everything that is needed for you to be profitable, to answer all your questions that you may have over the previous webinars, not only this marathon, but also the previous marathon. So thank you so much for being here with us across the previous 5 webinars. I will see you on the 6th ones. Make sure that if you have any questions, you bring them there. We're going to break it down. I'm going to do my best to answer it. Have an amazing weekend ahead of you. And give us, let's say, 30 minutes. And just attend the same link, click on the same link in your email, and you will find the downloadable workspace with the setup that I was showing today that you can directly import in your Trading Artist platform. So I'll see you in the next one. Have an amazing day, and thank you for being with us.